Alright guys, how you going today? Alright guys, hopefully this is better. So if it's all streaming okay. I basically had to close down everything so I can't see from my end if it's working. Okay, yeah guys have to go tell me. Hey Omega Man. Can you hear me, Potter? All right, click live, guys. I'll go from the live area. We'll make it start up from there. So sorry it took a little way, a little while to get going here. Unfortunately, my new PC is still not here. So got this email from them today. Your delivery has been delayed. God. Which is annoying because I want to get it set up before the new year, and hopefully I can, hopefully they come tomorrow. Otherwise, it's a public holiday on Monday. Won't come until Tuesday, and it's just now it's getting onto some ridiculous amount of time. So, but what can you do? It is it's Christmas time, and you can't rush these things. They only got back to work really today. Now, I just want to talk to you about what's happening in the market here. We got a US dollar sell-off. Started yesterday night with the stock market reversal in the US. So everyone's talking about the 20,000. We didn't get to 20,000. We just got up to 19,980, and we started selling straight away. Pretty brutal. 130, 40 points. The biggest sell-off we've had, sustained sell-off we've had in 2 months. So this is this is a sort of thing that is dangerous here, because the next support is so far away that you would see a multi-leg sell-off here in the US dollar if this was to happen, mainly because if you get selling in the stock market, then you get people going into the bond market, buying the bonds, and if you're buying bonds, that pushes down the yield. Now, the big thing that the America has going for it right now, the US dollar anyway, is that the yields have been rising higher than the rest. So any sort of risk-off activity is really going to hurt that yield advantage. And the main safe haven that comes back into play is the yen. And with that sort of scenario, it's very easy to see the euro rally as well in sympathy, and gold rally in sympathy. And if you're looking at the euro here, we're still making lower highs, but it wouldn't take much for us to get back above that 105 level in the coming hours. And if that's the case, then you're looking at dollar yen testing 116. Now 116 is a pretty key level, but it's by no means sure that it's going to actually it's going to hold there, right? This is this is day one of the pullback, and we're already near there. Easily, if stocks have a second day of selling, that the dollar yen will be dragged lower with it, especially if the US yields continue to fall. US 10 years dropped below 2.5. So 2.5 was a key level on the way up, and it just broke below that on the way down in the Asian session. So in that sort of scenario, then we're looking at the previous resistance, 114.80, as the sort of level that would be ideal. Now, if that happened, so a couple of days of selling in the stocks into the new year, US dollar being sold back with it, getting down to that 14.80, then that would put the euro actually around about 106.50. So really, that would be ideal. Probably won't get that because we haven't had those nice big sell-offs for a while. But selling anywhere above 106 would be nice. Buying anything close to 115 would be really nice in the dollar yen as well, and probably going to work out for you in the medium term. Pound's a little bit more tricky. The pound is struggling to gain with the euro, and the main reason for that is that euro pound itself is rallying on the back of the euro rally, and when that happens, then the pound underperforms. Also, because pound yen and pound have such a close relationship these days, you're getting the pound being sold in sympathy with dollar yen, or just struggling to gain against the US dollar. And this is a common theme that we've seen in the last 12 months. When you have those risk-off sellings, euro usually does well, euro pound does well, dollar yen does bad, pound yen does badly. yeah, and pound underperforms the rest. So I wouldn't be surprised at all to see that continue. Now the other thing that traders are talking about today, a few clients have called me and talked to me about, is gold, asking if it's safe to buy in this sort of environment. Now, in some regards, it makes a lot of sense. And in terms of that breakdown level 45 to 50, whether that can be a sort of level that now will be a pretty big resistance where stops will be above. It's similar to the dollar yen at 116 and the euro at 105. There's a hell of a lot of stops here and just short term momentum play to get that going up towards 65, 70 quite easily, maybe even 80 if things get really out of control here. Gold usually overshoots anyway. So I'm interested in selling euro. I'm interested in selling gold. You don't have to sell every rally though, and if I'm going to step away from one rally, it's this particular one. There's a bit of a feeling about it that it's going to take some scalps. I suspect dollar yen as well. Just too many people are long, and it's just going to wash out those longs that have been building up lately from 117. Don't think there'll be too many of those 117s left by the time we get down to 115, 114.80. And then we can start to rebuild and US dollar strength comes back, just general. Whenever dollar yen finds support, that's the moment to get out of any sort of counter trend trades in the other pairs and start looking to sell the euro against the US. Start looking to sell the Aussie against the US. Start looking to sell the gold against the US. But right now, I'm looking for a leg or two higher in all of those. I'm not going to be surprised if the downtrend holds, but I'm not selling into this particular one. Okay. Now I'm looking to buy some dollar yen. I'm actually going to get pretty aggressive here. If we get down to 115, I might buy 2 lots at that level. And that sort of won't overexpose my account too much. I'll just be holding that sort of levels. If it gets below 113, I'd be a little bit worried. Might take a 5 to 10k hit, whatever it is at that point. But let's worry about that when it happens. There's many other scenarios where we make 5 to 10k in that. So I'm gonna leave that order there, because if it is a sharp sell-off, I want to be there to buy, because it might go down and spike back up in the early hours between, say, the end of the US session. If the US session ends on a weak note, down 100, 150 points tonight, then in that sort of twilight period between the end of the US and start of Japan, often there's a little bit of plungy action, and that's the sort of thing that I want to buy into, because I think that the Japanese will come in and buy pretty aggressively from this sort of level. Mentally, there's no really big news here. This is just profit. Alright, so I didn't get filled on this one. This is limit orders that we've had for a while. Didn't get filled on that yet. I might actually remove it. And actually I'm going to put it in at 0.5. Just in case 116 is the bottom. So yeah, I'd say to the euro sellers and the gold sellers, which is a few of you guys around, this is the one that I would sit out and not get involved in it, especially since that the Wednesday price action yesterday was so aggressive, and then we've come back straight. There's just no reason to be selling aggressively again here. It's just unlikely that you're going to get a second sell-off like this. This is not how the market usually plays. And you've got to think of it as a game, right? You see hundreds of hands, hundreds of different days of trading in downtrends and in uptrends. In like the 60th day of downtrend, you don't see this very often turn into another leg down, right? Often what you'll see is you had the sharp reversal from all these fresh longs that are building up, hoping to break 105, take those stops. Now we're going to take the stops of the shorts who are too late to the game. Right, that's the sort of, if you're thinking about who's most at risk right now, it's the shorts. And that would easily rally us up to mid 105s. That's on nothing, right? They'll get to 105 on nothing. Like 105.50, I mean, on nothing after we broke that. But yeah, between 105 and 106, I think there's a bit more risk reward in the sell side. Just have a look at what's going on with the stocks. If dollar yen's not stopping, then the euro. Now the selling in the pretty sharp. So the Nikkei is down in 24 hours. It's down 500 points, which is pretty decent for huge for the Nikkei. Nikkei always moves more than most indices, but pretty tellingly here, you're not getting any movement with the DAX. DAX buyers came in pretty quickly on the dip there. Suggests to me that this ain't going to be a big sell-off. Just profit taking. And I think that again in the coming weeks. It's just maybe not in the next couple of days. Alright, so that's my basic premise. That's my basic setup here. That's what I'm trying to involved in. Now, in terms of data, isn't much data. There is some end of year flows coming through in the next 24, 48 hours. Let me just read off to you some of that information so you know what's happening here. Or maybe I can't do that. Yeah, look, it's struggling, isn't it? Oh, Betsy, running out of energy. Preliminary. Let's have a look here. So Citibank month-end FX hedge rebalancing, December 2016. Estimate points to both euro and US dollar selling and buying of all other currencies. This is a relatively rare signal historically. The sell euro signal is a result of extremely good performance of the euro equity markets. And this means that the foreign investors have to hedge the increased value of the eurozone stock markets, stock assets. US stock markets have also outperformed. generally across the board, that's going to create a fair bit of US dollar demand across all the currencies, except for the euro. Alright, so we'll see if that comes through. We're already seeing a little bit of US dollar weakness. Not seeing much euro weakness though, so it's not coming through on that. But it's going to be a very interesting US session, that's for sure. You can see these are the most important ones. You know, dollar yen at the moment, DAX. Dollar yen's holding, DAX is holding. Euro's trying to push here. If one of these goes, you know, euro pops 105, that'll be enough to test, to get the dollar yen testing 116. Maybe enough to sort of break the downside support here in the DAX. Remember, if the euro is rallying, then the DAX gets sold. That's just natural. And then you're looking at a situation where the feedback will go into safe haven buying. Gold will go higher. Bond markets would be bought, and the yields will fall. So this is sort of, it can get pretty ugly pretty quick in pullbacks because of that feedback loop. And usually, you know, sell-offs are much quicker than the rally to get there. All right, but I'll be looking to buy. If we have another sell-off tonight, I'll be looking to buy, sniffing around there. All right, guys. Aussie Kiwi. I haven't looked at this for a while. Now, a few traders are trying to buy this dip. It's now broken back below 104. I wouldn't be buying this one. I don't trust this pair anymore at all.